Most investors get denied for a DSCR loan because they think it's based on their DTI, when in fact, it's not. The DSCR loan product is actually based on the asset itself. In this video, I'm gonna show you how to use 5 simple steps that you can utilize to actually get approved and get the best pricing for a DSCR loan to make it easier for you to build your portfolio. A lot of people right now are using the DSCR loan product to build a portfolio. Right behind me is a home that I'm gonna show you guys right here in Clermont that you can buy, turn into a rental, and utilize this loan to build your portfolio. Let's go. So as a real estate investor myself, I've utilized this product for my own rental properties, right? So in this video, I'm gonna give you 5 simple ways to make sure you're very successful. At the very end, I'll give you a checklist that you can utilize to go along the way as you're doing this to be able to make sure the DSCR works for you. As an investor, I'm a lender myself. I've utilized this several times. So make sure you stay tuned to the entire video. At the end, I'll give you the checklist and where to go to get that. So as I'm saying this property, I'm gonna give you a very simple formula you can utilize to make sure you understand the DSCR product. Simple as this. You wanna make sure that your rents supersede your payments. For example, oftentimes lenders like myself, we're looking at least for a 1.2 to a 1.0 ratio. So that means your actual mortgage should cover everything, your principal, insurance, taxes, and HOA, and the actual rental income you're getting from it should be greater than that. For example, let's give you a quick, easy way to look at this, right? So let's just say your rent is $2,400 and your principal, interest, and also your HOA and taxes are roughly around $2,000. That's like a 1.2 ratio, right? So that will make a lot of sense for someone to lend on that because you have about a $400 buffer from that $2,400 to $2,000, right? So if anything happens along the way, you have money put aside and you're actually cash flowing. If you don't cash flow, you got to put more money down to buy down the actual cost of the loan so you have a better ratio. Part of the DSCR product is basically this. The R is your rents. Simple as that. You want to make sure you can increase the rents. If you can increase the rents and make sure it's stabilized, right? We're not making up rent numbers here. You want to look at what the market rents are, increase the rent and decrease the expenses, which is basically your mortgage payment, which concludes your insurance, your taxes, your principal, your HOA, all these things along the way. If you can decrease that and increase your rent, you have a better ratio and the loan is more attractive to a lender when they're lending money to you. So remember, increase rents, decrease your expenses. So if you're shopping for a mortgage lender to help you, make sure the origination is a good price on origination. Typically, you may pay 2 points or 2.5 or 1.75 on origination. You just want to decrease your taxes, so shop for taxes, get proper tax quotes. Make sure that HOA, if there's HOA, I typically like to avoid HOA because I don't have to worry about them, right? But if you can't avoid it, make sure it's a low HOA. DSCR is a little finicky when it gets to like condos and townhomes when they have higher HOAs. So here are the 5 ways for you to qualify and make it very easy for you to get your DSCR, very simple, and make sure you get the best rates. All right, so we discussed 1 and 2, right? 1 was increase the rents, 2 was decrease your expenses when you buy the property. So 3 is making sure your credit profile is very strong. A lot of people think that they can do a DSCR with a low credit profile. That is the case, right? However, if your credit profile is very strong, it makes it easier. You wanna make sure you remove late payments. Hell, make sure you don't have any late payments. Make sure your credit profile is very strong so when you go apply, it's easier, right? Any underwriter looking at your profile and sees a great credit profile, it makes it simple and easier. You can rinse and repeat the process over and over and over again. So a DSCR product cannot get funded unless it's in an LLC. A lot of people tend to forget that. It cannot be in your personal name. It must be in an LLC because you're buying a rental property. It cannot be your primary residence, right? Some people think they can get away with that. Don't get caught up doing mortgage fraud. Do things the correct way. Get the product, make sure you get it leased, and make sure you have everything in place, a tenant paying the mortgage. Don't make this your personal property. Number 4, liquidity and reserves. Very simple. If you're gonna buy products like this, which is a house like I'm in right now, make it to a rental property, you gotta have some cash reserves. Not having cash reserves make you look like you're not a strong borrower and you don't have your stuff together. Essentially what they're looking for is at least 2 to 3 months. Sometimes they want 6 to 12 months. Your cash reserves must be in place to protect you. Let's say you don't have a tenant for 2 to 3 months, right? You have to have the money to make the mortgage payment until you have a tenant in place. Next thing is the seasoning. If you're buying a rental property, it's best to have a tenant in place. If you don't have a tenant in place, You can still get funded, you just won't get as much money as you need to actually purchase the property. So make sure you get a high appraised value and make sure that the rents are actually what they're supposed to be. For example, if Zillow tells you the rent is $2,300, but a property manager tells you it's $2,000, there's a huge discrepancy. Make sure you're doing the right research so you can make sure you have a right calculation for rents, because that's gonna affect your ratios. And also your cash reserves and how much cash you gotta put down. Number 5 is pretty simple, guys. Making sure you choose the right loan product for you. Along the way, you might wanna consider a single family asset or portfolio loan. Also, when you're doing these loans, make sure you're actually looking at everything. Make sure the structure of the loan is the perfect one for you. Essentially, let's say you're doing a 30-year or 40-year loan. Pretty simple, right? Sometimes in DSCR loans, you have prepayment penalties. Those prepayment penalties can cost you a lot of money. Sometimes there are step downs, right? Maybe 5-year step down, 3-year step down, or you may have no step down where you gotta pay the penalty only for 2 years no matter what you do. Make sure you find the right actual DSCR loan product that fits basically your criteria along the way. Make sure you talk with a lender like myself, right? We go over every step of the way of every option we have, right? Because our broker, I can get different packages that may apply to you differently than someone else, because of your credit profile and the property itself, right? We look at the property and say, hey, you know what? In this position, I think you should go this route. Here's my recommendation. You let me know which way you want to go. Here are the deal killers that will make it hard for you and stress you the hell out. Simple as that. Properties that need a lot of renovations. Let's say you're buying a property that needs a roof. You need to do the plumbing. You need to do, that's a fix and flip. Make sure you're getting properties that's maybe in this type of condition, right? If we're looking at this bathroom, it's still livable condition. You can still rent this out. It may not be the perfect thing, but it's livable. You wanna make sure that when you're getting your things underwriting, right? When I talk to underwriting, I get realistic numbers for taxes. Let's say the person bought the house and they lived there, right? And it was their homesteaded property and you're buying it. That's not the realistic taxes. So we might want to inflate that up a little bit and actually make sure you're protected when you're doing underwriting. Surprises along the way can kill your deal. Plain and simple. Make sure that the rents actually match what you're actually getting for the loan, going through the whole process one more time, right? See what other people in your area is actually renting their house from. All you can do is go on Zillow, realtor.com, talk to an agent. These people will help you. If your rent does not match the loan, you can do it one-to-one, right? However, you're gonna buy it down. You can do an interest-only payment as well for about 5 to 10 years. We have a lot of different options and a lot of different products. So make sure you're not putting your money into a money pit. Make sure the house is at least somewhat sound and your numbers are being written the correct way along the way. And this is the portion of the video I want to make sure is very clear, and I want to make sure I read this for you guys. So let's go down the list together, right? How to get qualified and make sure your stuff is structured right. First, we're going to do a soft pull on your credit. Very simple. We're not going to do a hard pull. We're going to do a quick soft pull. Next, we're going to verify insurance, taxes, and also projected repairs if you need to do that in the property. I'll also talk to you about that. Next thing, verify your reserves, right? You're going to send me your bank statements so I can see you actually have the money, and what you tell me over the phone is actually what you tell me over the phone. Got to tell underwriting this, right? The next thing is ensure the property is in an actual LLC, that you have your operating agreement, you have your things structured the right way, make it easier. And also you have a purchase contract. A lot of people just send me a property that haven't even bought it yet. Say, I'm interested in buying this property. Yeah, that's cool, but it's kind of hard for me to get you a term sheet. Next thing we'll do, we'll order appraisal. Appraisal can take anywhere between 1 to 3 days. And guys, we can typically close a DSCR loan in about 15 days. We can do 15 to 20 days. Next thing, we'll lock in your terms, finalize your prepayment structure if you do have one, and also your payment so you know what you're getting and how it's going to be done for the next 30 or 40 years if you want to. Hell, maybe even 50 years from what I'm seeing right now in the market. Next, we'll do is clear to close. The conditions we'll get, the terms, we'll review it, make sure you give me all that information, and then we'll get clear to close. It's very simple. All you gotta do is tell me you're ready. Comment below. I'll make sure to get you the link so you can actually get the application to you guys right away, and we can get you funded. Just that simple. All right, very simple, guys. Let's get into this and make sure you guys have some clarity. Do we need your W-2 to actually do the loan? No. Do we use your job? No. We just want to know that you have the cash reserves and the property will support itself in making the rent payments. In the event that you can't make the tenant can't make the payments, you have cash reserves to make the payments. Plain and simple. Can you buy it in your personal name? No, it has to be in an LLC. So if you're in Florida, Georgia, wherever you're at, make sure you get this in an LLC. Don't put on a contract in your personal name. You can do an addendum later to change it, but it has to be in an LLC. Next, can you buy this in a duplex, quadruplex? Yes. You can buy a duplex, you can buy a triplex, you can buy a fourplex. You can do that and make it into a DSCR loan, make your life easier. All right, for my first time investors, yes, if you're first time investing, as long as you have the cash, you have the credit, you have the property like this in good condition that you can just rent it as is, we can get you funded, all right? And the LTV is a little different for first time investors depending on the property, but we can generally help you. If you have any questions or concerns or anything that pertains to investing in real estate, this is how we make real estate full circle for you. We take the information, we condense it, and we also help you through the process. I myself act like a liaison along the way because I actually do this. So if you're looking for anything as far as DSCR, comment below and let's get connected. If you stuck around for the whole entire video, I'm gonna map out this property behind me and give you guys an exclusive breakdown how this could be an actual rental property for you and how you can utilize the DSCR loan. All you gotta do is basically click the link in the video. It's gonna be a link below the video. Join the community. I'll give you a free checklist, and also I'll break down this property in Clermont and how you can buy this property and make it into a rental property and utilize the DSCR loan product. So exactly what I taught you guys in this video, I'm actually giving this house here as a great example of how you can buy this property and make it into an actual rental property, and I'll give you a free checklist. If you found this video any helpful to you in any way, any shape or form, all I actually do is subscribe to the channel. A lot of guys watch. I know you don't subscribe, it's cool, but just go ahead and do me a quick little favor and just hit click, click, click right there, and then leave me a comment below if you like it. If you don't like it, I still respond to it no matter what. So thank you. My name is Gene Garan. I make real estate full circle for you. Along the way, as I do it, you can do it as well.